Advanced Audit and Assurance, Chapter 11, Audit-Related Services. Subtopic 2, Agreed Upon Procedures. Section Overview. Section 1, The Nature of Agreed Upon Procedures. 2. International Standards on Related Services, ISRS 4400. Reporting on the Agreed Upon Procedures. Section 2.1, The Nature of Agreed Upon Procedures. In an agreed upon procedures engagement, the client that engages also decides the procedures that the accountant will follow. This is very different from an audit engagement, where the auditor decides the procedures to be followed in order to reach an audit opinion. The accountant provides a report on factual findings from the procedures performed. No assurance is provided. It is left to the user to assess the procedures and findings and to draw their own conclusions. The report issued at the end of an agreed upon procedure should be made available only to those who have agreed the procedure with the auditor or accountant. This is because other people who are unaware of the agreed upon procedures may misinterpret the meaning of the report. Section 2.2, International Standard on Related Services, ISRS 4400. The conduct of agreed upon procedures is related to ISRS 4400. Engagement to perform agreed upon procedures regarding financial information. Key points in ISRS 4400 are as follows. 1. The terms of engagement for agreed upon procedures should be set out in an engagement letter. The engagement letter should include the nature and purpose of the engagement, including a specific clarification that it is not an audit and it is not a review, the procedures to be carried out by the accountant, and the information to which the accountant is required to apply these agreed upon procedures, the form of the reports to be issued at the end of the engagement, and agreed limitations on the distribution of the reports. 2. The processes undertaken by the accountant to perform agreed upon procedures may be similar to those involved in an audit. Planning and documentation will be required. Evidence must be collected. Conclusions must be reached. A report must be prepared. However, since there is no assurance attached to the assignment, it is likely that the volume of work undertaken by the accountant will be significantly less than for an audit of similar financial information. Section 2.3, Reporting on the agreed upon procedures. The report of factual findings should contain 1. Title, 2. Addressee, ordinarily the client who engaged the auditor to perform the agreed upon procedures. 3. Identification of specific financial or non-financial information to which the agreed upon procedures have been applied. 4. A statement that the procedures performed were those agreed upon with the recipient. 5. A statement that the engagement was performed in accordance with the International Standard on Related Services, applicable to agreed upon procedures engagement, or with relevant national standards or practices. 6. When relevant, a statement that the auditor is not independent of the entity. 7. Identification of the purpose for which the agreed upon procedures were performed. 8. A listing of the specific procedures performed. 9. A description of the auditor's factual findings, including sufficient details of errors and expectations found. 10. Statement that the procedures performed do not constitute either an audit or a review, and as such, no assurance is expressed. 11. A statement that had that had the auditor performed additional procedures, an audit or a review, other matters might have come to light that would have been reported. 12. A statement that the report is restricted to those parties that have agreed to the procedures to be performed. 13. A statement, when applicable, that the report relates only to the elements, accounts, items of financial and non-financial. Example, report at the end of an engagement with agreed upon procedures. An example of an appropriate report in connection with accounts payable is set out below. 2. The Board of Directors, CBR Manufacturing Company. Report of factual findings. We have performed the procedures agreed with you and enumerated below with respect to the accounts payable of CBR Manufacturing Company as at date, set forth in the accompanying schedules not shown in this example. Our engagement was undertaken in accordance with the international standards on related services applicable to agreed upon procedures engagements. The procedures were performed solely to assist you in evaluating the validity of the accounts payable and are summarized as follows. Insert a list of agreed upon procedures. We report our findings below. Insert findings resulting from each of the procedures with details of exceptions as relevant. Because the above procedures do not constitute either an audit or a review made in accordance with international standard on auditing or international standards on review engagements, we do not express any assurance on the accounts payable as of date. Had we performed additional procedures or had we performed an audit or review of the financial statements in accordance with international standards on auditing or international standards on review engagements, other matters might have come to our attention that would have been reported to you. Our report is solely for the purpose set forth in the first paragraph of this report and for your information, and is not to be used for any other purpose or to be distributed to any other parties. This report relates only to the accounts and items specified above and does not extend to any financial statement of ABC Company taken as a whole. Auditor, date, address. Subtopic 3. Compilation engagement. Section overview. 1. Nature of a compilation engagement. 2. International Standard on Related Services, ISRS 4410. 3. Reporting. Section 3.1. Nature of a compilation engagement. In a compilation engagement, the accountant is engaged to prepare financial statements or other information and not to audit or review the financial statements or other information that has been prepared by someone else. They will therefore use accounting expertise rather than auditing expertise. An example is the preparation of financial statements for a sole trader or a club or association. The accountancy firm is engaged for its accounting expertise, not its auditing expertise. No assurance is provided by the accountant who carries out the work. The work normally involves the collection and summarizing of information. A compilation report may be issued at the end of the assignment, but some compilation assignments, such as doing a task calculation for the client, do not require a report. Section 3.2. International Standard on Related Services, ISRS 4410. ISRS 4410 revised compilation engagement regulates the conduct of compilation engagement. The standard was revised in March 2012 following growth in demand from SMEs for services other than audit. Demand has been particularly strong in jurisdictions where audit exemptions have either been introduced or extended. No assurance is given by the accountant about the information that has been compiled. However, the client gains some assurance from the requirement that the accountant for a compilation assignment must comply with professional codes of conduct. The accountant is therefore obliged to exercise due care and technical competence in carrying out the work. The key points of ISRS 4410 are as follows. 1. An engagement letter is required, confirming that the work to be carried out is not an audit and is not a review, that the engagement cannot be relied upon to disclose error, fraud, or other irregularities. The information on which the assignment will be based, for example, the accuracy and completeness, is the responsibility of the client's management. The intended use and distribution of the information that will be provided at the end of the engagement. The applicable financial reporting framework. The objective and scope of the engagement. Responsibility of the practitioner, including the requirements to comply with relevant ethical requirements. The expected form and content of the practitioner's reports. 2. Planning and documentation will be required for the engagement. 3. The accountant needs to have adequate knowledge of the client's business and its operation. This knowledge must also cover the accounting system, accounting records, and applicable financial reporting framework. 4. If the accountant becomes aware that the information provided is unsatisfactory, that is incomplete, inaccurate, or otherwise unsatisfactory, he should ask management to correct or improve the information. If management refuses to do this, the accountant should withdraw from the engagement and inform the entity accordingly. 5. The practitioner must obtain an acknowledgement from management or those charged with governance that they take responsibility for the final version of the information. Section 3.3 Reporting. ISRS 4410 revised. Compilation engagement requires that the report on a compilation engagement must be in writing and contain the following. 1. Title. 2. Addressee. 3. A statement that the practitioner has compiled the financial information based on information provided by management. 4. A description of the responsibility of management or those charged with governance in relation to the compilation engagement. 5. Identification of the applicable financial reporting framework. 6. Identification of the financial information, including the title of each element of the financial information, if it comprises more than one element, and the date of the financial information. 7. A description of the practitioner's responsibility in compiling the financial information, including that the engagement was performed in accordance with ISRS 4410 and that the practitioner has complied with relevant ethical requirements. 8. A description of what a compilation engagement entails. 9. Explanation that as the compilation engagement is not an assurance engagement, the practitioner is not required to verify the accuracy or completeness of the information provided by management for the compilation. 10. Explanation that the practitioner does not express an audit opinion or a review conclusion on whether the financial information is prepared in accordance with the applicable financial reporting. 11. If the financial information is prepared using a special purpose framework, an explanatory paragraph that describes the purpose of the financial information and the intended users and draws the reader's attention to the fact that the information may not be suitable for other purposes. Date of the report, practitioner's address, practitioner's signature. Example, compilation reports. An example of a compilation report is set out below. Practitioner's compilation report to management of ABC company. We have compiled the accompanying financial statement of ABC company based on information you have provided. This financial statement comprises the statement of financial position of ABC company as at December 31, 20x4. The statement of comprehensive income, statement of changes in equity, and statement of cash flow for the year then ended, and a summary of significant accounting policies and other explanatory information. We perform this compilation engagement in accordance with International Standard on Related Services 4410 compilation engagement. We have applied our expertise in accounting and financial reporting to assist you in the preparation and presentation of this financial statement in accordance with International Financial Reporting Standards for small and medium-sized entities. We have complied with relevant ethical requirements, including principles of integrity, objectivity, professional competence, and due care. These financial statements and the accuracy and completeness of the information used to compile them are your responsibility. Since a compilation engagement is not an assurance engagement, we are not required to verify the accuracy or completeness of the information you provided to us to compile these financial statements. Accordingly, we do not express an audit opinion or a review conclusion on whether these financial statements are prepared in accordance with IFRS for SMEs. Practitioner's signature, date of practitioner's report, practitioner's address. Subtopic 4, Chapter Review. Chapter Review. Before moving on to the next chapter, check that you now know how to 1. Describe the objectives and conduct of review engagement in accordance with ISRE 2400 and 2410. 2. Describe the objectives and conduct of related services engagement in accordance with ISRS 4400 and 4410. Quick quiz question 1. What is the level of assurance in a compilation? A. Absolute. B. High. C. Moderate. D. None. The answer is D. No assurance is provided in a compilation engagement. The accountant compiles the financial statement from the information provided to him, but he does not review or audit those statements. Question 2. What sort of assurance is provided in a review engagement? A. Positive assurance. B. Negative assurance. C. High level of assurance. D. No assurance. Answer is B. In a review engagement, the accountant carries out sufficient procedures to enable him to report in terms of negative assurance. Question 3. Performing a tax calculation for a client is A. An attestation engagement. B. A review engagement. C. A compilation engagement. D. An agreed upon procedure engagement. The answer is C. Question 4. Which of the following statements is correct? A. When a company negotiates a friendly takeover, it usually appoints a firm of accountants to carry out due diligence on the takeover target. B. In an attestation engagement, the accountant is required to report on the quality of work performed. C. In a review engagement, evidence is gathered mainly by means of computation and inspection. D. In an engagement to review financial statements, the amount of work required is the same as an audit. The answer is A. In an attestation engagement, the accountant is required to report that certain procedures have been performed, but not to report on its quality. In a review engagement, evidence is gathered mainly by means of inquiry and analytical procedures. In an engagement to review financial statements, the amount of work is less than for an audit because the required level of assurance is lower. Question 5. For companies required to produce interim financial statements (IFI) and have an annual statutory audit, which of the following scenarios would be more likely to occur? A. One firm audits the IFI and a different firm audits the financial statements for the year as a whole. B. The same firm audits both the IFI and the financial statements for the year as a whole. C. One firm reviews the IFI and a different firm reviews the financial statements for the year as a whole. D. The same firm reviews the IFI and audits the financial statements for the year as a whole. The answer is D. The IFI should be subject to a review, not an audit. That is the end of chapter 11. Thank you.